and welcome again to Wednesday live trading session with me, standard risk disclaimer explaining all possible risks associated with Forex market, and by accepting the risk, you're also proceeding further with me. CFD and Forex trading are leveraged products and can result in losses that exceed your deposit. So this video is not part of the .co.uk website, but the globaluse.com website. We will use POC zones, master candle setups, bull waves, price action. I trade this and you can also trade with me. This window is small size because I will be sharing two of my screens. So, okay, don't worry, you will see everything. If we don't see setup, we don't trade. That is why we can use pending orders. Once you're in trade, you need to do your own management. Recommended risk is 0.5 to 1% per trade and don't exceed 2%. You want to trade like professionals do. And don't forget that losing is part of this business. So definitely my advice to you is to keep the risk under control. That is very, very important. Also, session recaps are from Monday to Wednesday, and these orders that we make on Wednesday, they're valid from Wednesday till Friday, and the latest you can get into an entry is Friday. Okay, market orders are valid instantly. Don't forget that Friday is day to take profits. Use profit stops and follow me on Tarantula FX. Okay, guys. Now, as you can see, we already had a running trade. We have a Euro GBP. Okay, and I will show this right away. Give me a few seconds. So Euro GBP, currently this is our trade. Okay, now you can see I will balance between my different screens because I trade different accounts. Okay, and I have this trade running. Uh, some are bigger accounts, some are lower accounts. It doesn't matter, guys. You can open whatever number of accounts you want. It's good, and we are trading with Admiral Markets, the broker that I've chosen. And here you can see the entry Euro GBP trade. Here you can see the thing is I enter this trade that is based on bull wave. Okay, but currently this is not a Camarilla MACD entry, but rather a bull wave entry. And now I will show you my other chart. Also have different orders that I actually that I managed to draw myself, and I hope correctly. But definitely, this is what I also think we might have. Okay, here you can see also different orders on my bull wave charting screen. So that is why I'm saying I try to balance between different screens, PPTs, different charts. So excuse me if you see something that is different. Guys, this is bull wave charting. Don't this don't look at all these lines. I like to also draw these lines, and these lines myself. This is Fibonacci extension tool, and the way how I trade bull wave is not the only standard wave how I trade, how other people trade. The thing is, I have modified bull wave. As you know, guys, I've been trader for 10 years. I cannot just listen what people said 10, 15, 20 years ago, because market has been changed. It's not same as it was like 30, 20, 10 years ago. So we need to adapt to present market conditions. Fortunately for you, you have Chris and me here with Admiral Markets, and we are there to cover you, to teach you all modern things. Okay, all modern things and all different good things that have changed with the market. Okay, so this is what I see here. This is wolf wave. I charted. This is a little bit different. You need to watch for tops and bottoms. I don't use zigzags for bull wave. So this is 0.1, this is 0.4, 0.3, 0.5. This is my fib extension. If I draw my fib extension from the 0.2 to 0.3, keeping this line with a 90-degree angle. Okay, 90-degree angle. I actually I wanted to enter here a 95, but I was a little bit late on this account. So you can see I actually made 4 different orders with 0.10 lots. Total is 0.40 lots on this account. And I want to get it to 1 to 3 wolf wave point. Okay, this angle here, 90% angle. Okay, and I have a lot of comments from Twitter, so excuse me if you see some of these happening. Let me see if I can stop it from showing. So 90-degree angle is very, very important here. Okay. Okay, I think I stopped the Twitter from notifying me on each single tweet or like or whatever. You see, guys, this is 90-degree angle. So on 90-degree angle, we can enter the market on 50% or 61.8% of Fibonacci retracement. For aggressive trades, we can actually place our stop loss below 88.6, and also for conservative stop loss, we place it below 100%. At this time, guys, I am a little bit maybe more aggressive on this account, but I can easily move this even lower. So on this account, it's 83.80, but I will move it to 83.60. And guys, I will show you how to do it now. It's very easy with Admiral Markets platform. You just need to move this, okay, to 1360, let's say. Okay, here. So on this account, you can see 0.10 times 4, okay? Different entries because I want to manage my entry. My entry was 83.99 here, okay? And as you can see, we also have some other account that I also trade, and this account is it has more money on that, so we can actually here you see it's also same thing. And why I'm showing you this, because I want to show you other setups. I will now go with euro yen. Okay, here guys, entry was 83.99. You can enter at 83.95 if you want. You need to keep stop loss at 83.95. 83.60. Okay, 83.60. You can also use mini terminal. This is very, very useful tool. Don't forget, with Admiral Markets, you have correlation. You have correlation tool. This is very important, guys. Correlation matrix. Here, with this tool, you can actually go with correlations from different currency pairs. This is what I really like to use if I trade different pairs. So if you manage to have couple of entries, okay, then you need to use correlation tool. Correlation tool is extremely important because you don't want to be caught in with double exposure or triple exposure to a currency pair. Okay, so this is it, guys. Okay, correlation matrix here. Easily you can see, focus on these colors here. When correlation is high, usually you will see this. I prefer orange and red color. The best is if you see red color. So if you see that the quadrant is red and you see plus 70, plus 80, plus 90, it means that pairs have a positive correlation. They're moving in same direction. The bigger the correlation is, the movement will be similar. If you see negative correlation, for example, minus 89, like Australian dollar, New Zealand, and dollar yen, it means the pairs are moving in totally opposite direction. Low correlation or neutral correlation is not important for us. We want to focus mostly on red and on orange, but mostly on red. Of course, orange can also move the pairs in the same direction. Or if it's negative correlation, they can move in the opposite direction. Okay? Okay, now I will open again mini terminal. Mini terminal, very, very, very useful tool. You can manage whatever you want, whatever you wish. Actually, here with mini terminal, you can manage also risk. You can manage here. I will. You see, I just need to show you task and settings here. You can see margin calculator, auto tasks. You can undock chart, undock terminal. So it's very, very useful tool. Okay, the question, what is your TP for Euro GBP? Guled from Canada. Yes, I remember Guled. My TP, you can easily see it here. Final TP is 84.40. Okay, but have in mind that 84.40 is final TP. Okay, because ATR indicator actually shows 84.40. So this is it. This is a low moving pair, guys. So this doesn't move a lot. But here again, you can see it's only 58, but I'm aiming for at least 20 pips on this pair. That will be like, well, a little bit below 50% of ATR. So 30 pip would be 50% of ATR. But let's say that even though if I take 20, 25 pips, it would be still good because you see it's very low ATR. Okay. One more thing that I wanted to show you is it also has a confluence, guys, with my Wolf Wave teaching. As you know, I trade Wolf Wave differently than it was originally shown by Bill Wolf. I mean, it's the same charting as he used, but I actually use the Fibonacci expansion tool, slightly different way with 90% angle here, and my TP, because the price is below 0.5, it didn't break through 1, 2, 3 trend line. Once the price breaks through 1, 2, 3 trend line, we can go for 1 to 4 target. This is the target, but because price is below 0.5 here, I want the price to hit at least this spot here. So I might close my orders or couple of them on this account if I see that market is hitting these lines there. I, guys, love Wolf Waves, but as I say, I might do another blog on Wolf Waves. You will see it on Admiral Markets website, and I think that I will be able to do it maybe this Wednesday. Okay, so this is modern approach to Wolf Wave trading. You always need to have you always need to have most a modern approach to trading. Simply because something was successful 10 years ago, it doesn't mean that it is successful now. And that is the biggest drawback of people who don't trade anymore. So being an analyst is not the same as being a trader. Many people ask me, how come, Nenad, that your analysis is so good? Why is that? Why it is that your analysis is so accurate? And I always say that is because, guys, I am not just an ordinary analyst. I also trade. It's different when you make the analysis for trading and when you make the analysis as 95% of people do it. They don't trade. They just do it because, they don't have any risk with doing analysis. They can be wrong. They can be right. I also can be wrong and I also can be right. But if I trade what I see, if I don't do the analysis correctly, I will lose my money, right? So the difference between trading and analysis is big. And as I say, you have that advantage that you can also trade with me and that and you have also guaranteed that every analysis that I make is a trading setup. Every analysis that I make is trading setup. That is the biggest advantage of my approach. Now, guys, let's move to other screen. Now I will show you dollar CAD setup. Okay, I will show you dollar CAD setup. Very, very important. I want to trade also dollar CAD today. I don't know if I will get the opportunity to trade it. So this is Euro GBP. Now let's see dollar CAD. Here, guys, dollar CAD. I already did the analysis, and I said below 36.95 we could see a breakout. It goes now. If you are caught in this trade, if you're caught in this trade, uh, definitely you need to know that it made a double bottom. Okay, and here you see this double bottom. It doesn't mean that it won't drop, but still, guys, maybe it's best to wait for trend-based entry. This has the possibility to drop, because simply if you put a trend line here, you see now it's retesting this trend line. It's below L3. Now it could even go lower. So if you traded this breakout setup, yes, it can go lower. But also, guys, it's very important that we can have a buy setup. So here, this would be a buy setup. Let's see if we will get any market order also with dollar CAD. Currently, we have market order here on Euro GBP. I'm 4 pips up, but I want more. Also on my other account, I am 5 pips up, but I don't want to get only 5 pips, want to get more. Judging from my Wolf Wave analysis, 1 to 3 trend line break with 90% angle, 84.20 should be reached with Euro GBP. Oh, guys, I'm really enjoying in these live sessions. I see so many comments, so many positive thoughts. Angel is saying, Nenad, where we can see education from you on ECS box indicator. I still didn't make any video on ECS box indicator. If you don't know, guys, EC box indicator is a lead currency box indicator that we developed to show you the high and low of the range, and also the color of the box. Actually, it gives you prevailing market condition. So if this box is in this color, it means the day is bearish. This is bullish color. So you see, this is high, this is low. Leon is Leon is saying elite currency is making some great indicators lately. Well done. Yes, thank you, Leon. I mean, we have a lot of good indicators, especially developed for traders, because we actually know what traders want to have. It's not just theory. This is practice. So of course, guys, it's definitely different when you read and trade with traders, not analysts. And of course, guys, I mean, not every single of analysts or traders out there can provide you with proper tools. One of the reasons I like also to trade with Admiral Markets platform is these kind of tools. Very unique, guys. If you have demo account, unfortunately, you will be restricted to 30 days. Oh, look at this, guys. Look at this. It's going down. Yeah, I missed this trade on this account, this breakout trade. But if you trade it, as I said today, now you are 10 pips in profit or 15 pips in profit, depending on your entry. Yeah, so that is why I'm saying one of the reasons is also this great tools that I want to use with AM Broker. Unfortunately, for people who don't have a real account, they cannot use this tool more than 30 days. Yeah. Okay. Guys, if you are in a trade, I advise you to scale out, put your stop loss to break even, and enjoy free ride. Final TP is here. But in order to get here, the price needs to break and close below L4 short breakout level. So in order for the price to break down, it needs to close below this level. So what I advise you is, guys, scale out. scale out. Ankit is saying he sold at 3705. So yes, you sold it a little bit higher than I originally told you to sell, right? In my analysis. Now let me show you my analysis, guys. For all of you who don't follow me, please do this. I publish the analysis every single day here on Admiral Markets website and on Forex Street. This is my analysis from today, and I said a breakout to the downside could happen if 36.95 breaks. In the moment I published the analysis, the price was at 3705. So Ankit, yes, you sold it immediately when you saw my analysis. It's okay. But maybe you should have waited for this trend line to break here. This, guys, is so-called contracting triangle. Contracting triangle happens in the period of consolidation. You need to know that. So the period of consolidation happens when the price gets to its extremes. Now with here with a 1 hour time frame, that is my favorite time frame of choice for trading daily intraday positions or day trading positions, we have confluence here of X3 or X cross. X cross is the cross of a trend line and Camarilla pivot point. X cross of trend line and DH3 suggests that this is indeed contracting triangle, because lower trend line also is making an X cross with daily L3. So breakout to the downside happened, guys. And now you are in profit if you traded this. So final TP is the POC. I would go with a buy trade around 36.40. It's daily L5, it's 8-year low, and guys, this is order block. Don't forget that this is still uptrend here. You see, this is still uptrend. So here you are making, now if you're in a trade, it means that you are actually in a counter trend trading position. Okay, so you are basically countering the trend. Here we buy when price is oversold. When it gets there in uptrend, the price would be oversold. Daily L5, order block here, confluence zone for another buy trade. So I'm waiting for this, and primarily the reason why I'm waiting for this is because I'm having positions on Euro GBP, buy trading positions on different accounts, guys. Here also you can see. So let's wait. Don't forget, Euro GBP is very slow moving pair. So you really need to be patient with Euro GBP. Okay, now let's use Euro Yen. Guys, this is what I would be trading on Euro Yen. This is also a wolf wave pattern here. This is 0.2, this is 0.1, this is 0.3. And here, guys, okay, this would be 0.4 here. If this doesn't go to the upside, this could be confirmed 0.4. So if this gets here, I would be buying Euro Yen. If it drops, I would be buying Euro Yen. That is what I want to do. Now, one of the reasons why I like to trade bull waves also here on this pattern is because bull waves are very accurate when there is a trend also. It's primarily, guys, primarily counter trend trading with bull waves. But if you see a trend, then definitely this can be another possible entry in the market. Okay, I will just label here 0.4. Give me a few seconds. Here, you see it's 0.4 here. And if it goes up, then this 0.4, we would need to move like this. But the main thing here, guys, this is 0.123. When it hits here, I would be buying this. Now, what I wanted to tell you guys, if you, let's say that this is our buying point here. Okay, so if this gets there, we are buying. If it drops below, we would need to put our Fibonacci extension, okay, and measure 50 and 61.8. That will be a scaling in. Stop loss goes below 88.6. So let's see, because guys, you know, there are two different ways to trade bull waves. Okay, yeah, we need to have this. This is important for making fast entries in the market and to calculating your positions, risk size, etc. So there are two types of entries with bull wave. You know 1 to 3 breakout. So if this gets here, breaks out from 1 to 3, then it's a breakout entry. If it gets here, touches this, it's another entry. And if it gets below, this is yet another entry. So 3 types of entries with bull waves. That is what I will publish this Wednesday. I will publish a blog showing you how to trade with bull waves on 3 different ways. So you will have even more chance to make bull wave entry. So yeah, let's see what the market will give us. At this point, we are in market order Euro GBP. Okay, so this is trading opportunity here on Euro Yen. Okay, Euro Yen 123.45, stop loss 123.15, TP is 124.10 based on bull waves at current market conditions. What I suggest, if we see Euro Yen, if we see Euro Yen happening today, then you need to protect your profits on its way towards 124.10, provided that stop loss is not hit beforehand. So you need to do it, guys. It's very important because bull wave is valid only on for this day. Bob is asking, can Euro Yen chart be on its own? Cannot copy it. Euro Yen chart can be on its own. I don't understand what you're referring to, Bob, but 123.45 is okay. Here is your possible entry. Okay, so this. Let's see how Euro GBP is going. The one with numbers on. This is the chart. You should be able to see the chart. 1, 2, 3, 4. This is point. If this gets here, this would be 0.5. If it gets below, we need to place Fibonacci tool. If it breaks out from below 1 to 3, that would be breakout entry. The other chart is Euro GBP, Bob. I'm only showing on other chart Euro GBP. Here I will share this immediately. Here, do you see this now? Do you see the chart Euro GBP now? One, two, three, 4, 5. This is Fibonacci extension here. And now currently I am 6 pips up on Euro GBP, 0.40 total lot size divided on 4 different entries at the same time, 83.99. So what I did is actually I divided my trade to 3 different positions. I want to exploit movement at least 1 to 3 trend line. Okay. Okay. So let's get back now here. This is Euro Yen again. How to draw lines? I did it manually here. One, please go to my Bull Wave blog on Albion Markets website. I explained there how to draw the line on Euro, how to draw the line on Bull Wave. Not just one line, but all those lines. There are some rules that should be taken into account when you trade Bull Waves. Bob, please tell me what you need from Euro Yen chart. This is Euro Yen with numbers on it. 1, 2, 3, 4. And possible entry is 123.45. And stop loss would be 123.15. That is what I would like to trade if it happens today. Okay, it needs to happen today. If it doesn't happen today, I will not trade Euro Yen. Okay. Aha, you want? Yes, yes, yes. Uh, the same as buy. Okay, okay. I understand what you mean. Let me try to. Okay, I will try to show you correct chart. This is what you see now. Okay, guys, here. Euro GBP, Euro Yen. Is it okay now? Euro Yen. You should be able to see Euro Yen. 123.45. 15. You see, now everything is clear. Yes, Bob, you wanted to say, uh, yeah, you wanted to say that I should actually, uh, that I should switch screens and share my other screen that shows a full PPT presentation. Yeah, no worries, no problem at all. Everything is clear. Great. So yeah, here guys, trading opportunities. We are in the Euro GBP market order trade. This is pending order based on bull waves. And this is dollar CAD pending order based on my analysis today. So different possibilities for us today. Let's see if we have any more setup, but I'm currently really focused on this Euro GBP and potentially Euro Yen, although not sure if we will see dollar CAD. Dollar CAD needs to really needs to go a little bit lower. Really, guys. It needs to go a little bit lower. Oh, let's see. Dollar CAD. You see, it's trying to get below. So if you are in a breakout trade, I already gave you my advice because you are now 12 pips in profit if you traded my dollar CAD setup from Admiral Markets website. So yeah, I mean it's a little bit. You see, it's going down, but at this point it cannot reach the lower zone. It's very slow. Euro GBP, yes, of course. Euro GBP, we are already in. Uh, let's see here. I made the market order at 83.99 on one account, and on my different. On my second account, I made a Euro GBP order on 8400. So yes, I trade different accounts. So it's easy for me. Yes, crude oil will be today in an hour, Marco. Indeed, that is why we might see dollar CAD pull back. But I would go with dollar CAD trade no matter what the data will be, unless we see a huge drop here, guys. If we see a huge drop, instant drop, and that the level is being really broken heavily to the downside, then I would probably enter a little bit lower, but I would still keep my stop loss of 35 pips. So if I see instant candle that breaks my POC zone and goes more to the downside, then I can make even order here at 36.20, but stop loss is 35 pips. Don't forget, your risk should always be based on your stop loss. Risk is fixed, stop loss is dynamic. 35 pip will be on this trade. But if I see a slow grind, a drop and a slow grind to POC zone, then it doesn't matter. I mean, still the same for me. 36.40 buy trade, 36.05 is stop loss, and TP is 37.20. Final TP for dollar CAD trade. That is what I would do. Ignacio is asking, are all the setups of the recap session of mine must be deleted now? Yes, because a Monday session recap is valid always same time, from Monday till early morning Wednesday. Always the same time. So keep in mind, guys. Euro GBP trade still positive few pips, but it's currently not going anywhere. It's very slow, but I will keep this trade. I don't care really, because I'm in this trade. I'm always patient, guys. So here, this is how I make 90-degree angles on bull wave trading. So let me show you quickly, but I will describe this on blog, so you don't need to worry about. I will remove. This is how I do. First, when I see 1, 2, 3, 4, 5 wolf wave, and if wolf wave is broken to the downside, guys, if a wolf wave is broken to the downside, then I will base my entry on a Fibonacci expansion tool, measuring the distance between 2 and 3 and applying Fibonacci ratio. So 3 different entries with wolf wave. This is third type of entry. So first I mark 2 and 3 points. So this is point 2, this is point 3. This is 90-degree line from point 2, 3. This is 90-degree line at the bottom of point 3. What I do is insert Fibonacci expansion. Here, the thing what I do is I draw this Fibonacci expansion like this. But I move this final point of Fibonacci expansion to match 3.3 in a 90-degree angle here. Okay? So it does not, you see, it needs to be, this angle is what matters. It does not need to be a 90-degree angle perfect. We can place it like this. This is what it matters. This final line, final Fibonacci expansion line needs to have 90-degree angle between the distance of 2 and 3. So you might also place it like this. Okay? See, it doesn't matter. This angle here is what it matters. This is estimated time at arrival. Originally, estimated time at arrival was here, but now it broke down. So this is why I made entry here 83.95. I mean slightly higher. Okay, now guys, in order to, I will show you right away how to make this. Okay, I will leave it to blog. I will show you correctly in blog how you can apply these labels close to Fibonacci expansion and these prices. I will show you that, so don't worry. What you should know is that currently how I teach people to trade bull waves, three different entries, three possible entries. Breakout of 1 to 3 trend line, immediate touch of 0.5, and expansion on a 90-degree angle with 50 and 61.8 as entry. That is what you should know. So market order has been made on Euro GBP. Here, guys, you can see divided on different entries, so 4 different entries at the same time. 80 here, 83.99. Stop loss is here, TP is here, okay? So 5 different orders. You see, 4 different orders. It's also 0.4 divided on 0.10, 0.10, 0.10, 0.10. And here, buy entry, TP stop loss. So please pay attention to what I'm saying. You cannot trade the same way you traded 10, 15 years ago. Even though if you are an experienced trader, heed my advice. It's very important for you to understand the principles, that some principles have changed. Here, definitely breakout went down. I would close down position of a, if it doesn't get here, well, you still could have made 15 pips on breakout. If it gets there, you are on your way to make a positional trade. Few more questions, guys, and we need to call it a day. Paul is asking, what is stop loss for dollar CAD? Paul, if your entry is 36.40, your stop loss should be at 36.05. 35 pip stop loss at 36.40 or slightly below, but you need to use 35 pip of a stop loss. Don't forget it. I wouldn't go with GBP Australian dollar and Australian dollar New Zealand at this point, Digo, because I have scanned through different pairs, and this is what I found to be the best at this point, because crude oil inventories could drop the price towards our POC, so we could use this. Don't forget, these kind of spikes that happen after the news have only a short-term impact on the market, because you can use those spikes to enter at market. Euro dollar is simply not going anywhere, very low range. Really, I am not bothering with trading euro dollar at this point. Instead, I have opted to trade euro GBP that has a bigger pip value than a euro dollar. Don't forget, guys, pip value is also very important, because pip value is not same for each pair. Euro GBP has a bigger pip value, okay, than euro dollar. So I'm trading euro GBP now. This is where you can see my article, okay. Admiral Markets, you go under Analytics, Traders Blog, and Bull Waves, how to identify them. The easiest way to find Tibor, my Bull Waves, is just enter on Google Bull Waves Nenad, and you will see. It's very, very easy to find it. Yeah, I mean, very easy to find it. So you just go to Bull Waves. Let me. So Bull Waves Nenad, and like this. Hit the button and you will see. See, bull waves Nenad, Google, and here a lot of different types. So yeah, easy, right? Okay, and finally, guys, I will do a quick recap of today's trading session. Okay, Angel, I can take a look at gold. Angel is asking me to take a look at gold. I will do this quickly. I will do this quickly. And then, guys, uh, we will see. Okay, gold V-shaped reversal. What I would do here, I would place a trend line. You see there is a trend line here on gold and one horizontal line. So if this makes a breakout of this high, I think there is a potential to go to 4-hour, to H4 long breakout on Camarilla pivot. Final TP is ATR projection, but it can also go to H5. So these are your targets on a breakout to the upside here. This is the zone where you can actually make a breakout. So if this makes a breakout, the first target is here, second target here is here between the zone. So Angel, I hope this helps. This is also, you see this V-shaped reversal and this rectangle here. Guys, this is a scholastic example of cup with handle pattern. You see, guys, this is cup with handle. V-shaped reversal, consolidation, rectangle, and this is cup with candle. Breakout should go up. This can be a good setup on gold. Even I could maybe make a trade. I just want to see a breakout of this pivot point, and this could be a good long trade. Egils is asking, do you still favor short pound dollar? I shorted pound dollar 3 times, Egils, and 3 times I took profit from pound dollar. So I wouldn't go if you want to short pound dollar, you should have already done that because pound dollar made nice pullback from our POC zone. Very nice pullback, pound dollar. You see, pound dollar dropped from POC zone. So you should have taken this opportunity. I was a little bit careful with shorting it at 4 time because it started to go up. So in that case, I would short above 30.20. But definitely POC zone kept it here, and you should have shorted it. I don't know if it will go to 28.40. In order to go to 28.40, we need to see close below L3, 4-hour close below L3, 29.18 or 29.15. 4-hour close below this zone could actually give us potential for another breakout. Ideally, for 28.40, we should see daily close below 29.00. So let's watch for daily. If daily close is below 29.00, I think the way to 28.40 is open. Okay, let's do a quick recap, guys, now. And here, Euro GBP is currently on my entry point, 83.98, 99. To see my stop loss is here. You see my stop loss is there. So based on bull waves, I would still want to get it higher. Stop loss is very clear. Okay. Also on this other template here, let's just just give me a few seconds. I need to share my other screen here. Okay, here you can see also Euro GBP and Euro Yen. 123.45 would be my entry. And dollar CAD, if you want to trade a dollar CAD setup, then definitely, guys, dollar CAD 36.40. 36.40 here. And quickly, Euro GBP was market order, dollar CAD pending order. If it drops below 36.40, just you can enter lower, but 35 pip stop. So if you enter at 36.20, your stop would be 35.85. And yeah, Euro Yen. This is it, guys. So I hope that you enjoyed pound dollar breakout to the downside setup and dollar CAD breakout to the downside. At least we made some pips. Thank you, guys, for your comments. Thank you for listening to me. I wish you a great training day. Let's see what Euro GBP will give us. Don't forget, you need to have a maximum 2% of risk, 3% maximum, guys, on your entries. So don't forget it. Holy grail in Forex trading in money management. Thanks, guys. Talk to you soon. Cheers, everyone. Bye for now.